All right, guys, Mike from the Credit Game. Hey, I wanted to do a natural personal video for you guys. You know, I come to you every single day, Monday through Friday, to bring you value, to bring you education, to bring you the credit knowledge that we were never taught in schools and nobody ever taught us as family. You know, a lot of us didn't have a mommy and a daddy who had great credit. So look, it doesn't matter where you started from. It doesn't matter if you had a drunk uncle, a grandma that she raised you, mom and dad didn't have great credit. I don't care. I started from the baseline of 514. Today I'm at 827 and can leverage anything that I want financially. You know, when I go to stores, I don't ask how much things are. I ask if I can buy the store. The difference is this: I understand credit and I understand the credit game. And so I want to share with you a title today that a lot of our clients are asking us, and in this day and age, should I be getting more credit cards? And the answer is yes, yes, and no. Should you be getting credit cards? Well, the first tip that I want to give you is this. Because of FICO coming out, because of the system FICO 10 that we have coming out that most lenders are going to be adopting towards the end of this year, I would absolutely 100% start getting some credit cards. Now, the way to know which credit cards to get and the credit bureau they pull from and the score needed to get that and the approximate credit limit is called our secret lenders list. I'm going to put that link for you guys. This document right here. We've got members, a lot of our members, that are selling this document for over $100. I'm about to give it to you guys for free, okay? It's in the description box below. So that'll tell you where the card's going to pull from. Go to your credit monitoring service, check to see the highest credit score, and then just match it up. Okay, cool. This Capital One pulls from Experian. It requires a 600 credit score to get a $1,500 credit limit. Bing, bang, boom, you know where to go. Definitely start getting credit cards now because they're going to start tightening up on the lending criteria just as soon as FICO 10 comes out. I don't want you guys to get spanked and hosed because you didn't act today, okay? So yes, I would definitely be getting more credit cards. Now, if you guys have got too many credit cards right now that are leveraged, and what that means is you got too much leverage on them, the utilization is very high, then I recommend getting a loan, personal loan company. I would recommend getting a consolidation loan. FICO is going to respect you, and actually, it's going to be actually a benefit for you guys to get a consolidation loan. So you'll take those credit cards and you'll pay those credit cards off with this consolidation loan. Now, there's pros and cons to that. The fact is that you'll actually benefit because, check this out, it's going to pay off the revolving part of the credit. Okay, revolving means credit cards, and installment means like your loans and your house and your car. The fixed payments, they don't change. But FICO is actually rewarding people who are getting loans and taking less impact on the loans than they are on the revolving. So if your credit cards are maxed out, you are, or even 70%, 80%, whatever, higher than 50% utilization, you want to get a consolidation loan because it's going to pay off the credit cards and then you'll have one fixed payment, which FICO actually rewards you for, okay? So remember this, okay? Do you want to get more credit cards? My answer initially is yes. If you've got a bunch of credit cards that are maxed out or above 50% utilization, look into a consolidation loan. And I'll also put a link below of a company that is one of the best for average credit just to get a consolidation loan. I would recommend that. Now, the downside to get a consolidation loan is that it pays off your credit cards. Now you have one fixed payment that's going to be your installment payment. But the downside is if you start using those credit cards again, which I don't recommend, now you've got two payments because now you got your credit cards that you're using again, plus you have your monthly payment that you're going to be using with the loan. Okay, so you'll have that fixed payment, and then now you get your credit cards. I always recommend if you do consolidation, take the credit cards and do not use them because now you've got two payments. All right, make sense, guys? Now, the third thing is if you already have credit cards, okay, and your utilization is 20%, 30%, even up to 40%, I recommend contacting the banks ASAP while the lending criteria is still loose and asking for a line increase, okay? Now, I'm going to give you this, and this is not legal advice. This is just advice on things that have worked for my clients, so take it for the advice that I'm going to give you. I'm not a lawyer, an attorney, and I'm not a specialist in this area, so this is for educational purposes only. What I have found is if you guys are looking to get credit line increases, you would contact your bank and you would say, look, I'm looking to renovate my home, get a new kitchen. I want stainless steel appliances. I'm looking to get a brand new hardwood floor put in. I'm looking to get new granite countertops. That renovation is going to look probably anywhere between $10,000 and $15,000. I love the credit card that I have right now with you guys. It's been phenomenal, and I would like to get a line increase to be able to put that expense on this credit card. And I know that I only got X amount, but I need that extra 10, 15,000 to be able to do the renovation work. Okay, now, why do banks love that? They love it because it puts more money on the credit card, gives you a higher line of credit, and they get more interest. Okay, so it's a win-win-win. So if you got credit cards, take a second, call the back of the card, tell them the story that you're doing a renovation work, okay? And what we have found is that if you go crazy on your income, okay, remember that credit cards are stated, and this is for educational purposes only. Credit cards are stated income and stated information, meaning that's non-verifiable in most cases. That being said, I would somewhere be between that 75 to 95,000 annual income, over 5 years rental history, and over 5 years with your job history. Why? They want stability. They want to make sure that you're in one place, you're not bouncing around the whole United States, and they want to make sure that you got a good enough income to pay their credit card back. Okay? We have found that our clients who have done that, not telling you to fudge, okay, but there's a little room, wink, wink, okay? What I am saying for educational purposes only, these are the things that have worked for a lot of my clients who have that. Somewhere between 75 and 100K is where you want your annual income. This is even for new applications. 5 years plus for rental history or mortgage history that you want to say, and you want to be somewhere in the relevance of job history above 5 years. Okay, these are my 3 secrets I want to tell you right now. Okay, what I'll put below is a secret lenders list so you can start knowing what credit cards are pulling from what bureaus. I'll also put in there the consolidation loan that I feel is the best right now in the market with the lowest interest rate. I think it's at a 5.9 interest rate. You're not going to find a credit card in a million years for 5.9. I've got an 827 credit score, and the best card I have is 9.8%. So I could literally take all my credit cards and put them onto a consolidation loan, and I would be at 5% interest rate versus my average, which is probably 13 to 15%. Most of you guys that have got credit cards are probably in the 20 to 30% interest rate. So just the money you're going to save by moving it over to a loan, a consolidation loan, is unbelievable, right? It's one fixed payment, one stable payment each month, saves you time. You don't have to go through every credit card and make the payments. You don't have to worry about missing a payment. Set up that consolidation loan on a, it's a monthly recurring payment, so you can set up on auto draft so you never miss that payment. It pays off your credit cards. Your score shoots through the roof because all that revolving debt gets paid off through the loan. Bing, bang, boom. Give me a thumbs up. Love you guys. Mike, Credit Game. I'm here for you every single day to give you the best knowledge, what's going on. Don't get spanked by FICO. Take knowledge now. And look, if you need help with any of this, because you're like, my credit score is low, I'm trying to get a new vehicle, I would love to get into a new place. I got a lot of people right now that are looking to get a brand new home, their first time home buyer, brand new vehicle, they're tired of riding around in a beater. They're looking for the higher limit credit cards. I can help you with this. In fact, I can give you the information that I would do for my own credit. I created the Credit Game for myself. I went from a 505 to an 827 using the Credit Game. The same one that I built for myself is what I share with the world now. That's what I provide. That's what I shared with, and this is the program that we sell every single day to help you guys get what you deserve in life. Again, it's not about selling anything. It's not about the money for me. It's about me leveraging and raising the national credit average. I'm thinking so big that I'm trying to raise the entire national credit average up. Okay, I'm not thinking about fixing Johnny's credit by giving him a trade line. I'm saying, how do I move the entire average credit score up through the nation? Okay, and by doing that, the Credit Game is able to do that, because not only can you use this program for you, but you can use it for your mom, your family, your spouse, your clients. Everybody on one program can use the exact same services. Think about that. You get it, and you can use it for everybody. Why? Because it goes to your email. As long as you have that email, you have the services that are there available for you. So if you need help with that, guys, that's what we're here for. We're here to help you. Call me, 904-420-7772, 904-420-7772. But I wanted to give you these 3 tips to help you out, to share some love with you, to give you some of the best tips that are going on right now in the economy. And I always keep you up to date with what's the newest trends and the newest things going out. Do not get knocked over and beaten down by FICO, because if you wait, I promise you, if you wait and your credit score right now is under 700, you're going to get your head knocked off. That's why I want to come to you every day to give you the new stuff that's coming up, okay? So, love you guys. Thank you for being part of the Credit Game. Appreciate every one of your subscribers. Give me a like. Give me a thumbs up. Make sure you turn on your bell notification, right? Let me say this again before you call me. Like, subscribe, and then hit that little bell, okay? 3 things. Like, subscribe, hit the bell. Why? That helps out, man. It helps out our channel, man. Like, it's how we share love. It's how we share the channel with more people. And the more people we can help, the better and closer we're going to get to changing the world's economic system and the credit system and raising the national credit average. So, call me, 904-420-7772. Thumbs up, like, share, and hit the bell notification, because every day I'm coming to you, bringing you more data, bringing you more credit knowledge, bringing you more financial knowledge, and that's what I'm here for. That's my passion. That's my love. Love you guys. Talk to you in a few minutes. Let's roll.